Guys, you are welcome to today's episode. In today's episode, we are going to be discussing something very important. Have you ever placed a trade thinking support will hold, only to see price breakthrough and reverse against you? That's where the flip zone comes in. In today's video, I will show you what a flip zone is and how to identify it, and how to use it to catch high probability trades in trading. So first of all, I'm going to explain what flip zone is so that you don't mix it up with flip zone and breakout block. And by the way, if you've not watched my video on breakout block, do well to click the link on the description box below to watch breakout block so you can have a full understanding of and the differences between breakout block and flip zone. What is flip zone? A flip zone is simply a price level that changes its role. For example, a support zone that breaks and later acts as resistance, or a resistance zone that breaks and later acts as support. This happens because market psychology flips. Buyers who entered earlier may now become sellers, and sellers may turn into buyers. That's why flip zones are powerful. They reveal where traders are trapped and where liquidity sits. So now I'm going to show you a practical example, some illustrations of the bullish and bearish examples of flip zones before we come back to the charts. So this is a typical example of a market that is doing higher high, higher low, higher high, higher low. So you see the market is uptrend, is moving up, right? So it breaks structure, it retraces back, and it breaks structure to retrace back again. So as it gets to the other block, it does what? It reacts as if it's going to buy. And then the next thing, it breaks that very order block. It breaks that zone. That is where flip zones comes in. So that is your flip zone. Unlike the breakout block, which just breaks and then retests to move. But here, there must be a reaction. So you can see this is our order block where the market is supposed to pick up from, to buy from. But it got here, it actually reacted as though it want to buy. But the next thing it does, it flips and then it breaks past that other block, taking your stop loss and then leaving you stranded. But don't worry, who got it covered. So by the time you understand the differences and how to navigate and go about it, you will know what to do the next time. So once this happens, the next thing you're going to do, that you're monitoring your trade. Of course, you see that the market, the other block has become invalid. So what we're going to do right now is to mark the flip zone. So the flip zone becomes your other block. This is where other block becomes. Of course, the market has flipped from buying to selling. So the next thing you're going to do is to mark it, your other block, and wait for market to retrace back into that other block, and then you sell up to this low, and then you take your profit. Of course, your stop loss slightly above it, and voila, you're good. So you do something like this, sure enough, the market will come back to retest that same zone, that same flip zone, or your new order block now. That's where you enter for a sell. So you're no longer buying, you're now selling. And your stop loss will be slightly above it, and your TP will be the next turn. That will be your TP. This is 1:2 risk to reward ratio, and it's a perfect trade. So let me show you the example of the opposite side, which is the bearish scenario. So market is doing lower low, lower high, lower low, lower high, meaning that it's going to come back to this other block. Okay, it got there, it reacted as though it was going to sell. The next thing, market flips and takes a stop loss, and the next thing you're going to do is to mark this other block. The market has flipped. Here becomes your entry point. So you're no longer selling, you're now buying. Just like the same, your TP will be the next high, while your stop loss will be slightly below the recent low. And this is what it's going to look like. 1:3 risk to reward ratio, and you're good. So when such a thing happens, you don't have to panic. Why? Because you know what you're doing, you know your onions. So all you need to do is to flip. As the market is flipping, you're flipping as well and changing bias and direction immediately. You're no longer buying, you're selling. You're no longer selling, you're buying. All right, so let's go to the chart so I can show you perfect example. So all right, so as you can see right here, I have what here? Break of structure. This is a break of structure, and this is, so what do I have here? Typical example, market is doing lower low, lower high, lower low, lower high, lower low, lower high, as usual, lower low, lower high, lower low. Instead of it to come back to this other block right here, what happens? You see that as soon as it got there, what happens? It actually reacted as though it was going to continue selling like it did previously. But no, this time around, it flipped back and it breaks this zones, this other block, making this other block invalid, and this becomes what? Change of character. Here becomes a change of character. So what are you going to do? The next thing you're going to do is to just map out your other block right here. You can see that here the origin that breaks that structure is where you're going to mark for it to come back to. So you mark it like so, and when the market comes back right there, you're in the trade. No second guessing, you enter and you execute. When you execute, you take your profit on those. This will be where you are going to take your first profit. Your first profit will be here on this high. Of course, your stop loss is slightly below that low. That's your first TP is here, because you know market has changed structure. So you're no longer going to be selling, you're now going to be buying. First TP, second TP, third TP, and so on and so forth. So take note, some common mistakes to avoid. Avoid entry immediately after the break without waiting for a retest. Trading weak zones that haven't been tested multiple times. If you start marking flip zones on your chart, you will see how much cleaner your trading becomes. So if you found this helpful, smash the like button, subscribe for more Forex strategies, and let me know in the comments if you want me to break down live chart examples in the next video, or you want a different thing altogether. Let me know in the comment section below, and don't forget to share, like, subscribe, and see you in my next video. Bye for now.